Knight Frank predicts that Asia will see the fastest growth in the number of ultra-high net worth individuals over the next 5 years, as the COVID-19 infection curve begins to flatten in Asia-Pacific and economies rebound. Based on its wealth sizing model survey, Knight Frank says the number of individuals with $30 million or more in wealth will increase by 39% in Asia, led by Indonesia at 67% and India at 63%. This compares with the global average of 27%. It expects the number of millionaires worldwide to rise by 41%. Knight Frank said in a press statement that the low interest rate environment, increase in fiscal stimulus and surge in asset prices have resulted in the world's population of ultra-rich increasing by 2.4% over the past year. It added that investing in prime residential remains one of the preferred investment priorities for these ultra-high net worth individuals. On the domestic front, Knight Frank Malaysia Managing Director Sarkunan Subramaniam said the country saw an 8% rise in high net worth individuals between 2015 and 2020 and expects a significant recovery of 36% in the number of such individuals in the upcoming 5 years. Based on the Knight Frank Attitude Survey 2020, the real estate consultancy also noted that 36% of its clients in Malaysia reported an increase in wealth in 2020 versus 65% of clients here in 2019. This year, the figure should increase by another 36%. Grab Holdings is reportedly considering a secondary listing in its home market of Singapore after completing a Nasdaq listing via a $40 billion SPAC merger, said a Reuters report citing 3 sources familiar with the matter. The People told the Newswire that listing on the Singapore exchange would enable Grab to have an investor base close to where its regional business is based. This would potentially offer its customers, drivers and merchant partners easier access to trade its shares. According to Reuters sources, Grab is in the early stages of considering a secondary listing in the city-state. The report said it was not clear how much Grab might aim to raise in any secondary listing, with financial terms and timetable still in the early stages of consideration. Citing one of the sources, it said that while Grab has sufficient cash reserves and could end up raising only a small amount on the SGX, a listing would mark a big win for the exchange. The Holstein Milk Co. is said to have proposed a 1 billion ringgit Islamic bond issue under the Sukuk Wakalah program, says Mark, which has assigned a preliminary rating of AAIS with a stable outlook to the planned fundraising exercise. The Holstein Milk Co. is a company under Malaysian sovereign wealth fund Khazanah Nasional's commercial fund. Mark analysts wrote in a note today that the company is an integrated dairy farming player with operations ranging from cattle breeding and milk processing in Malaysia and Australia to distribution of dairy products. They said the assigned rating is driven by its growing market share in the dairy industry and its improving profitability, characterized by strong operating profit margins and a moderate leverage position. These strengths, they said, are counterbalanced by risks associated with a rapid business expansion phase and biological assets. Casino and hotel operator Genting Singapore has decided to disregard the resolution to increase the limit of size of the Performance Share Scheme Share Awards to the Executive Chairman Tan Sri Lim Kok Teh, following feedback from the operator of the Singapore Exchange. A PSS plan allows employees to earn actual stock in their company. The company establishes specific financial objectives, which, once achieved, will trigger the awarding of stock grants. In a filing to the SGX, the group highlighted the resolution, which was put to a vote at the EGM on February 4, 2020, was duly passed, and the executive chairman and his son Lim Kiong Hui Choi had abstained from voting on the resolution with respect to his direct interest in the company, Genting Overseas Holdings. In this regard, the company had taken note of feedback given by the SGX that Genting Overseas should also have been required to abstain from voting on the resolution. Moreover, Genting Singapore acknowledged that had Genting Overseas abstained from voting on the said resolution, it would not have been approved. As such, the company said it will not regard the resolution as having been approved. UEM Agenda has strongly denied allegations of improper work planning and resources allocation, as well as other claims against its subsidiary Agenda Propel. Agenda Propel is being sued by Ahmad Zaki Resources Unit, Ahmad Zaki, for allegedly failing to complete an 87 million ringgit subcontract under the Klang Valley MRT2 project. The job was awarded in 2016 and involves the relocation of telecommunication works to facilitate the construction of a viaduct guideway from Persiaran Dagang in Bandar Sri Damansara to Jinjang in Selangor. According to the writ and statement of claim, Agenda Propel's failure to have proper work planning, allocation of resources and manpower resulted in it being unable to meet the completion date set out in the contract. In a filing with Bursa Malaysia today, UEM Agenda said its unit, having consulted its solicitors, Messrs. Zul Rafiq and Partners, is of the view that this suit is totally without merit and that it will robustly defend itself against the claim. The civil suit is fixed for case management on April 27th by way of e-review before the High Court Deputy Registrar.